waiting. There's a lot of talk out there about, oh, the market may crash, all that good stuff. If you're thinking of waiting, consider the math. We're gonna go over the math on why you should buy right now and not wait. Okay guys, let's get started. So today we're gonna go over a math equation. It's brought to you by my go-to mortgage lender, Leader One Financial. Thank you, Kevin Roller, for putting this together yesterday on your post. I'm stealing it and using it for my content. So, $150,000 home today, the mortgage payment, the principal and the interest, so we're not talking about taxes or insurance, but just the loan costs, would be $653 a month right now. Again, only for principal and interest. Now, the scenario that we're talking about is why you should buy right now and not wait. So right now, interest rates are historically low. We haven't seen this low of interest rates in a really, really long time. So it's a great time to take advantage of that. But let's say you want to wait because you think that the home values are going to decrease. We're going to go over that scenario and why you should not wait. So let's say over the next 12 months, home values do decrease, and they decrease by 10%, let's say. That same $150,000 home would now be worth $135,000. You're thinking it's a steal. So if interest rates go up just 1%, which is probably, it's a possibility when the rates are how they are right now, very low, and what's going on in the economy and the market and how volatile it is, you know, things can happen and increases will happen in interest rates. So if a 1% increase happens on that payment on a $135,000 home, it's actually gonna be $11 more than this payment here, okay? It's gonna be $664 a month for your principal and interest on a $135,000 home with a 1% increase from what rates are right now, okay? So let me say that again. That means buying a home right now for $150,000 would be $11 cheaper than buying a $135,000 home if rates went up just 1 percentage point. So you may be thinking, $11? That's nothing. So let's look at the scenario if rates increase even more, okay? Rates go up 2%. That would increase your mortgage on a $135,000 home. It would increase it $100 more than this payment here for a $150,000 home. So you'd be paying $753 a month for a $135,000 home versus if you bought right now a $150,000 home, you'd only be paying $653. So what's that comparable to? It's comparable to if you bought a $118,000 home with these higher interest rates, it would be equivalent, the monthly payment would be equivalent to you buying a $150,000 home right now. So I'm gonna repeat it again because my cameraman looks a little confused, he's shaking his head. So because interest rates have risen, right, by 2%, in this scenario, yes, properties plummeted, okay? And the home is worth $118,000 now. Your payment is $653 with the higher interest rates, okay? If you buy right now with the current interest rates, $653 would get you $150,000, the same payment as the $118,000 home with higher interest rates. So another reason why you should not wait and you should buy right now. Let's say you're pre-approved right now and your maximum amount is $150,000. That's with today's interest rates. So if interest rates rise over the next couple of months, and let's say they do go to that 2% over the next 12 months, and you've decided to wait, yes, you were approved for $150,000 today with the lower interest rates, but if interest rates rise, again, it would be the same, the payment's the same, so the mortgage lender's looking at your debt the same. So what that means, if you're a little confused, would be if interest rates go up, the maximum amount that you would be pre-approved for would be $118,000. So your purchasing power actually goes down, it declines if interest rates go up. Okay, so let's say your pre-approval amount right now is a lot higher than the $150,000 mark. that means your purchasing power declines substantially. So if you're looking at 200,000, you now could be looking at 170,000. If you were looking at 300,000, you now could be looking at possibly 250,000 as your max approval rate. The higher you go up in purchase price, the less purchasing power you'll have if interest rates rise. So, okay guys, if you have any questions at all, I know this topic was a little sticky and confusing, so feel free, please do not hesitate to give me a call, or I can get you in contact with my preferred and go-to mortgage lender, Leader One Financial, and they would be able to answer any specific questions that you have over your specific scenario and purchasing power. Have a great day and talk to you soon. Okay guys, it wouldn't be Tipsy Tuesday if I didn't go over something a little bit tipsy related. So today I'm drinking a red wine, shocker. Obviously with quarantine going on, I can't make it out to restaurants and share great tipsy and happy hours at local restaurants of dark cherry and espresso. So it's a great palate. Be awesome with some dark chocolate. If I wasn't dieting right now, I may have to sneak some a little later because who cares if you break the diet. But anyway, just wanted to share this with you guys. Hope you have a great day and talk to you soon.